Hi, my name is Carl Steigerwald. Our session today is going to be selling life insurance. Some of your takeaways for our time together would be determining the importance of life insurance, doing the ever-important needs analysis, and the uses for the life insurance contract. One of the things I always like to talk to the agents about when I have the opportunity to speak with them is that this, in essence, is where the rubber meets the road. This is what we do. This is our wheelhouse. We are the ones who are going out, sitting down with the client. We are helping them to establish and determine how important life insurance is. We're going to look at taking an inventory, if you will, of their entire existence. What are their assets? What are their liabilities? What are their hopes? What are their dreams? What are their aspirations? And then how can they use the different contracts that we have available to them? When we look at life insurance, we have to look at the importance of life insurance. Life insurance products are specifically designed to provide financial security. One of the best, phrases that I've ever heard, life insurance is the money you meant to save. You just didn't stick around long enough to make it happen. In your absence, please allow us. Life insurance will take care of costs associated with dying, medical bills from any type of final illness or accident, funeral expenses. Funerals, what's the cost of a funeral? I guess that's all determined by way of the individual, and there are so many different factors we have to look at. Cultural differences. In certain cultures, a funeral can last upwards of 3 days and cost in excess of $50,000. Recently, I had a very unique experience. I spoke to an individual who immigrated to the U.S. from another country. They have a very interesting aspect in their religious belief from a cultural perspective. They were born in another country. They moved to the United States. If they die here, their remains have to be shipped home. Yet another expensive venture that life insurance can take care of. Estate tax liability. We still have estate taxes, and depending upon where you reside, they can be federal or statutory. There are some areas where we are going to be subject to 2 different types of estate tax. One would be through the federal government, one would be through your state. There are also issues with remaining debt, things for loans, credit cards, your plastic passport to poverty. These are the things that we've got to take care of in the event that we've got 2 people that are generating the debt and also 2 people that are generating an income to pay that debt. The unfortunate circumstance, one of them leaves, but when they leave, they take their income, but they leave the debt behind. The proceeds of the life contract can be used to take care of paying that outstanding debt. Family and other individuals are always going to be reliant on the idea that somebody somewhere is a breadwinner. This individual is going to be the person whom they are financially dependent upon. In the event that that person is no longer there, the proceeds can take care of mortgage, it can take care of rent, income need, groceries, utility bills, clothing. There are other long-term needs as well. Education expense for children. Conversation I have a lot of times when I have the ability to talk to clients. What are you planning for your kids? Are you planning on them going to college? Yes, we are. Have you done anything to set up something for them? No, we're going to pay for it when we get there. That's great. What if you don't? Pay for it? No, get there. The reality is, again, the life insurance will be there in your absence and take care of it so that your children can realize the benefit of that education that you so desperately want them to have. The life insurance proceeds can also be used to supplement retirement incomes for a spouse, for yourself, for the entire household. One of the things that we need to do as the producer is we need to go out and sit down with the client and establish in their mind the importance of the life insurance products that we sell. A needs analysis needs to be taken into consideration. Fact-finding. We need to go out and sit down and we need to make sure that we take inventory. Ask for permission to take notes. When you do that, take notes. Find out what are the objectives of this individual. What is it that they want to do? There are so many different ways that we can do this, and every organization has their own established procedure. Needs analysis approaches can be done in so many different ways. Some companies will use a human life value approach. Others will use a needs analysis. Computerized programs can be utilized for the sake of needs analysis. Whatever you use is the best tool. And make sure that you have the opportunity to sit down with your client and establish with them why it is of utmost importance that they make sure that they get the life insurance in place that they need to take care of anything that could befall them. Human life value approach. This concept is a way of determining what a family would lose in income by the death of the principal wage earner. It is specifically designed to replace lost income only. The idea here is that income that has been established is there for the benefit of this family. In the event that the wage earner dies, we need to replace whatever that lost income is. And there are a number of different ways that this can be done. If you are using the human life value approach, you know exactly what I'm talking about. Needs approach. The needs approach is going to look at the need of the individual and the people that are dependent on this individual. What's interesting about this needs approach is that we are now looking at a vast array of different things here. We're looking not only at the income, both current and future, we're looking at all of the additional expenses that would be established in the situation. If we've got a household where we've got children going to college and we've got taking care of paying outstanding debt, and we've got a mortgage that needs to be satisfied, and we've got the cost of the death and paying for the funeral expense, any of those types of things, anything that we are looking at is going to be taken care of in the needs analysis. Neither one of these is the best. Both are very, very good. Whichever one you're using, that's the one that you need to land on, but make sure you're using one of these so you can make sure you are making the determination of what is best for your client, what's going to work best in their situation. We need to make sure that they know what their needs are. This is our responsibility. When we're looking at the types of policies and the uses of these contracts, we also need to make sure that we're looking at survivor protections. We need to make sure that anything that would befall the survivor is going to be taken care of, even something as simplistic as an emergency fund, just in case. Estate creation. Sometimes we've got people who want to establish and create an estate. They want to make sure that there's a legacy that they leave behind for their heirs. We can use the proceeds of this policy to take care of that type of a situation. Cash accumulation. If we're in a position where what we're trying to accomplish is supplementation of a retirement income, we have permanent life insurance contracts that accumulate cash value. The cash value that's being accumulated can be used as a, if you will, living benefit and take care of providing additional amounts of money that would have availability when this person goes into their retirement. So we can supplement their retirement income using the proceeds out of one of our permanent life insurance products. The security that's here, funds will be available no matter what the circumstance, and they're going to be there as needed. The idea being, whether it be the person who stays alive and uses the policy, or if someone should inadvertently die and they need this policy, we have the assurance that the financial security provided here is being taken care of by the insurance company. Liquidity is there. The idea is this contract can be made liquid if necessary, even during the course of the life of the individual. You've got an emergency that arises and you need access to cash, you can get in and access the cash value accumulation in your policy. Estate conservation. Oftentimes, I will go out in the field and talk to people, a farm preservation policy. Any type of an estate situation where what you want to do is provide the funds necessary so that if something happens to the individual, their estate, their house, and everything that they've left as a legacy for their family is going to be safeguarded and protected. We want to make sure we're not going to put the family into a position of having to liquidate the estate for the purpose of satisfying any outstanding tax liabilities or debts that have been left behind. We also have another interesting situation with the life insurance contract. We have an opportunity for what is called a viatical settlement. The viatical settlement was brought about as a result of a number of different things that have taken place in the country. But in essence, what we're looking at is a corporate structure that has been established. This corporate structure is looking to the owner of a life insurance policy who has been diagnosed as terminally ill. In the event that this person has exhausted all of their other resources that they need to maintain quality of life, what they are going to be able to do through the use of the viatical settlement is to sell all of the rights in their life insurance policy using an absolute assignment, and through that absolute assignment, they can sell the death benefit of the policy to the viatical company. The sale of the policy is going to provide the necessary funds for this individual to be able to take care of maintaining quality of life or taking care of any other issues that have befallen them as a result of their terminal illness. Upon the death of our insured, the viatical would be the one in receipt of the death benefit. That death benefit would be taxable to the viatical corporation. The death benefit less the premiums paid and any cost to purchase the policy, anything in excess of that is going to be taxable to the Viatical Corporation. Viatical settlements can be used if we've got someone who's chronically ill and they're suffering from a long-lasting disease and they are meeting the requirements as set forth under the activities of daily living. They cannot perform 2 or more of the 6 activities of daily living. Or terminally ill, they have a disease that cannot be cured, and the expectation is that it will result in death within 24 months. The Viatical settlement provider here is going to serve as the purchaser of, and they will deal with the individual and pay the policy owner a value that is less than the death benefit, but more than the cash value. This money will then be made available to the owner, and they can use it again for the benefit of taking care of quality of life issues or anything else related to their terminal illness or their chronic illness. In most states, Viatical settlement companies must be licensed with the insurance department before they can transact any business. If you look in your state, you will find that there will be provisions for Viatical settlement corporations. They are active in pretty much all the states out there. One of the things that's important is that the Viatical company has to follow applicable disclosure rules, and they must disclose to consumers exactly what is going on in the process of the Viatical. So what are your responsibilities as the agent? What is it that you need to do when it comes to the life insurance product? Well, you have to solicit, you have to make a sales presentation. You have to make sure you're providing all of the information necessary so that the consumer can make a well-informed buying decision. If you are advertising, you must always ensure that the advertising materials that you are using are truthful and not misleading in any way, shape, or form. Quick story for you. Also, don't rely on spell check. I recently received a piece of mail from somebody who was offering peace of mind when you bought life insurance. Unfortunately, peace was spelled P-I-E-C-E. Not a good way to go. We also, as producers, are subject to the idea of providing a buyer's guide. It's a brochure. The company you represent will make it available to you. It's a generic publication which is specifically designed to explain life insurance in a way that the average consumer can easily understand what they are buying. Please make sure that you go through this with the client that you are going to be servicing and make sure that they have a good, solid understanding of this product. To ensure proper handling, you need to make sure that when you're out there and you deliver the policy, you give a summary of coverages that are provided in the policy. You explain this policy in great detail. What I'm trying to convey here to you is deliver the policy in person. Please make sure that in all situations you refer to your state and the laws of your state and make sure that you meet all of the details specific to whatever is required. In recapping here, please don't forget to stress the importance of life insurance to the people that you have the ability to work with. Make sure that you do an in-depth needs analysis for all of these folks. And then make sure that you address with every client you have the privilege and the opportunity to work with what are the benefits and the uses of this policy and why it is so important to them. Thank you so much for your time.